Good afternoon, everyone. I want to welcome you to FAMP's Lunch and Learn series. My name is Gino Morrill. I'm your immediate past president. I'm joined today with Linda Knowlton, your current FAMP president, and we're proud today to present the people who are with us. They're also one of our main title sponsors and the pioneers in the non-QM lending space. We have with us Angel Oak Mortgage Solutions. And today's going to be interesting because today we're going to be talking about a lot of the tips and tricks and how to really take advantage of the non-QM loan products and make it a very successful part of your pipeline. So with that said, I would like to just throw a quick plug for FAMP, and I'd like to invite everyone that's on this call. If you are not currently a member, we have a lot more of these series coming up. Not all of them are free unless you're a member, so please join. For those of you who are members, we will also have this available in the library, available on the website, so you'll need to log in and gain access to those. And we have a lot of events coming up, so make sure you do check the calendar and schedule your lunch and learns with us. We have a lot more than that coming, and the trade show is going to be coming very soon as well. Definitely will be a great show this year. We have a lot going on, and with the industry being as hot as it is, it's going to be exciting to say the least. So with that said, today from Angel Oak, we're going to have a few people with us today. We have John Jamanad. He's the Regional VP of Sales at Angel Oak Mortgage Solutions. He's an expert in reliable consulting, supporting brokers and correspondents. He spent over a decade focusing on non-QM lending space, and as he puts it, it's all I know and love. We also have with us Stacy Flanagan, who's a wholesale mortgage account executive at Angel Oak Mortgage Solutions. She's also an expert in the non-QM lending space and serves as a reliable consultant supporting mortgage brokers and correspondents in the Tampa, St. Petersburg, Florida area. And we also have with us Scott Grubel. Now, Scott is he's here in the Miami and the Broward area. He's one of the top producers, and Angel Oak has been with them for quite a long time. I've known Scott for a while, and I will say that Angel Oak has been a very, very strong supporter of FAMP for a very long time. We're really proud to have them as one of our title sponsors this year for the trade show. So, and this is a great opportunity today to really ask some questions. If you do have any, please type them into the chat box. We're going to go through the material and content, and then we will be asking the questions that come through at the end of the presentation. And like I said, this will be recorded, so those of you who are members will have an opportunity to revisit this and look at it again. But I will tell you, from experience myself, these guys answer the phone all the time. They answer your questions. They're very friendly. They're one of the best in the business. So with that, I'd like to turn this over to John. He's going to go ahead and moderate this and maybe add a little bit more content to what I described about our presenters today. And I'd like to turn it over. Thank you, John.
Yeah, thanks, Gino. And for everyone on this call, it's really, really important to support FAMP. They do a lot behind the scenes at the state and federal level. So if you're not a member, please sign up. It's really, really important that you do it. So thank you, Gino, for allowing us, and Linda for allowing us to present here today. Again, my name is John Jamanad. I'm Regional VP of Sales here at Angel Oak Mortgage Solutions. I just celebrated my 7th anniversary here with Angel Oak. So, and we've been around for 8 years. So we've got Stacy Flanagan. As you all know, Stacy's been with us for 6 years. Stacy has closed over 1,000 units in the last 4 years. So, and has closed over $300 million. So she's not only a great friend, a great coworker, she's a top producer. So, and then we have Scott Grubel, who's also closed over 1,000 units since 2016 and is closing in almost on 400 million in production. So Scott's a top producer also. So, and been with Angel Oak, as Gino mentioned, for 5 years. So you guys have not just the 2 best reps in Florida, but you have the 2 best reps in the country here on you. So we're gonna moderate. I'm gonna moderate this. I'm gonna throw questions and comments, and Stacy and Scott are gonna give you guys tips and tricks and really a peek behind the curtain on how they get deals done. So without further ado, let's jump into it. Scott, just fill out, how do I get more business from realtors? Because that's what everyone really on this call is looking to get, right?
Yep, absolutely. And dealing with realtors and having done numerous realtor presentations, there are a lot of things we've learned through the years that really set off their antennas. And I think using non-QM products and programs as your presenting point or your speaking point when you do any realtor presentations or referral presentations is really cool to get your foot in the door. Everybody knows that you're going to do your conventional, your Fannie Freddie, your FHA loans. But when you come in and you do a presentation, you're talking about, hey, for your self-employed borrowers, when you look at the tax returns or when you're talking to them about what type of property they're looking to buy, take a look at their bank statements because we might be able to double the buying power. You go from being a buyer being able to buy a $300,000-$400,000 home to being able to buy a $500,000-$600,000 home. Those are the types of things that really get the wheels turning for realtors. Our debt service ratio program, the investor cash flow program, that's been another one that I have found has been really good to grab the attention of realtors because they all work with investors. And so when you can tell them, hey, look, we can get your investor into a 20% down on a property they're buying, 20% down, potentially interest only. So that increases the cash flow immediately for that buyer at extremely competitive rates with no income verification and no employment verification. Those are the things that really grab their attention. And I think it's a great way for a broker, loan officer to get their foot in the door with any potential referral sources you're looking to go after or with any ones that you're currently working with to add a little more value and show them that you have a lot more available than just your standard conventional loan. So that's been a great way to try and get a little more business. Again, as account executives, we're always trying to add value to our brokers and our loan officers and our partners. And then as you guys, as brokers, loan officers, and partners, you're looking to add more value to your referral sources, your realtor sources. And I think that offering these products and programs, or at least educating the community about it, really adds that value for you guys and separates you, sets you apart from any other brokers and loan officers out there.
Yeah, Stacy, anything else to add that you've done specifically in your market with, helping your originators, build and get business from those realtors?
Yeah, so I agree with Scott. It's a huge way to get your foot in the door. Brokers are always going in their door and offering the vanilla product, your conventional product. We have these great programs that help you get in the door, not only to help increase their potential income, but a lot of times, especially with the investor cash flow, they find out every time I've done a realtor presentation, I get approached after every single presentation that the realtor themselves want to buy an investment property using our DSCR program because they don't want to show their income. They don't want to take the time to dig up all their bank statements. So their wheels are turning. You're getting your foot in the door. They're probably using our programs for themselves. And don't be afraid to ask one of us reps to come help you present. I know some of you don't know the products that well, so that's what we're here for too. We can help you do a Zoom call or face-to-face with your realtors, so that way you don't have to be an expert on the product. We will go on your behalf as, we act like we're part of your group and we can help present this because we are the experts at it, so we can help you and you don't have to worry about fumbling through it or not knowing all of the ins and outs of the program. So we're here to help you every step of the way.
Yeah, two key points, one from Scott and one that Stacy just mentioned. When Scott mentioned, Stacy, you walk into that realtor's office, I've got great rates and I've got great service. What Scott said, I hope everyone really listened to that. When you use that bank statement program, you're not using their tax return, you use their bank statement for income, you are increasing that buyer's borrowing power. That's significant. When you tell a realtor that's powerful. And a realtor would love to hear that because obviously they're getting paid on the sale of the home. And then secondly, what Stacy said is our local account executives will go out on your behalf and present these programs for you on your behalf They just mentioned, they don't say anything about Angel Oak. They just mentioned they're just one of the investors that you have access to. And these are the programs they're going to talk about. And they're experts in them. Like I said, you don't get people who can close over 1,000 units in a few years who don't know what they're talking about and who don't present at the top edge of doing presentations. So you really take advantage of this. And if we have time at the end, we're going to show you where you can get materials at Angel's portal for that. Stacy, how do you answer when someone says, I'm busy with my conventional business, those non-QM loans, they're too hard to do. I don't want to do them. How do you counter that comment?
So we do get that comment a lot. It's the unknown. It's scary because you've never done it. But I promise you, they are so easy to do. We have step-by-step instructions. We have 2-minute video tutorials to walk you through every step of the way. And the great thing about Angel Oak is us reps will pre-qual your file before you even get it into underwriting. So we're going to scrub the file. We're going to scrub your 1003, your IRLA 3.4 now. We're going to scrub your credit report. We're going to make sure that the credit profile of the borrower fits. And on the bank statement program, we're going to also calculate your income up front on a TBD property. So your realtor is not going to waste their time driving around showing them houses that they might not be able to qualify for, or on the better spectrum, showing them houses that are under their buying power when they can be showing them $200,000, $300,000, $400,000 higher homes. So the great thing about us is we're going to do a lot of that work up front. So you're going to know whether your borrower qualifies and what type of loan they can qualify for and what type of price point they can qualify for on that bank statement program. So a lot of times with us doing that work up front, when it gets to underwriting, it's just a smooth process. But our step-by-step instructions and us helping you every step of the way, they're really easy to do. And I have a lot of brokers that are like, man, this is a lot easier than conventional loans. I wish I could send you all my stuff. So it is the unknown, and I get it. Your first couple ones, let us walk you through it over the phone. It literally takes less than 2 minutes to walk you through each step of the way.
Scott, anything?
Yeah, I love when I hear that response. So, you know, again, like you said, John, we're going to peel back the curtain a little bit, take a look inside. So, you know, my retail days a while back, I did conventional loans, but on the wholesale side, especially since I joined Angel Oak in 2016, it was primarily non-QM. Well, a lot of people on this call know when COVID hit, we began offering Fannie, Freddie, DU, and LP programs. And for a while there, we were getting really a majority of the volume we were getting during the refi boom was your conventional DU and LP. And after having the experience of doing so many of those, and we closed a lot of them during that period of time, I would venture to say that your non-QM programs are probably just as easy, if not, I'll go out and say boldly, easier than a conventional loan. And the reason I say that is exactly what the point that Stacy just made. So for a bank statement program, I have the luxury of knowing when that loan gets submitted to underwriting, the income is already approved. If everybody on this call, if you're not aware, like Stacy mentioned, we calculate the income for you on the front end at the pre-qual stage. When we give you an income approval, that income is concrete, it's solid. So we know when your buyer's out there shopping and when that loan gets submitted, we know already up front what the income is going to be. It makes it a lot easier for the loan to close once the loan's been submitted. For a debt service ratio program, for example, there's no income verification, there's no employment verification, there's no ratios. I mean, you're talking at your basics, your assets, your title, your insurance, your appraisal, and your REO information. So those are really easy. And then if it's a full doc non-QM loan, it's exactly the same as your conventional. You're looking at tax returns, W-2s, pay stubs. So I really believe in most cases it can be easier, if not just as easy as closing a conventional loan.
Yeah, and I think the key, you know, as Scott and Stacy said, is, you know, when you're doing that self-employed borrower, I was on a panel, I think 2 months ago, and they were talking about qualifying, you know, conventionally a self-employed borrower and what you have to do now with the last 3 months of bank statements compared to a P. I was like, holy smokes, it's easy just to get us 24 or 12 months bank statements that are off and running to the races, and you are increasing that borrower's purchasing power. So those are great. And again, us calculating that income up for you up front, it's critical, because half the business we get today is stuff that has fallen out of a self-employed borrower because they couldn't qualify for what they wanted to purchase, going full doc. So that's critical. Stacy, what are some of the other ways you support your LO originator community?
So again, I will do presentations with them. I will help them present to their realtors. I will go out physically or Zoom and present to their staff as well, all their other LOs, their branches, anybody that wants to learn about the non-QM. We all know that, Fannie and Freddie with the non-owner occs and second homes situation going on, we're picking up a lot of that volume. So for us to be able to educate your other LOs or MLOs in your offices and in your branches, besides your realtors as well, that's helping you. So I feel that giving you that added benefit is beneficial for you guys, because no manager has time to go teach all the LOs how to do non-QM loans. So, that's our job. That's what we're here for. So I love to be able to do that, as well as teaching you and also the processors how to submit the loans, because a lot of times, depending on who you work for, what company you work for, you take the application and then you turn it over to the processor. The processor's just used to doing vanilla loans, and they're like, whoa, I'm going to put this one on the back burner because I don't know what I'm doing here. So again, just picking up the phone and educating them and walking them through the steps. They are so appreciative of that, and just helping them get the loans submitted or disclosures requested, and literally just walking them through the process over the phone for 2 minutes, than having them try to struggle or put my loan in the back burner because they're getting all their vanilla loans out of the way.
Yeah, and I should have thanked everyone who's taking the time out of their day to join us here, and you're probably joining us because you're a little worried. You're coming off, which was the best year of 2020 since 2003, right? But you're hearing all the the noise out there about the Mortgage Bankers Association is saying refis are going to be down 46%. And if you just got done doing your taxes last month, you're probably saying, oh my God, what am I going to make this year? So thank you for joining us, because we're going to obviously give you some tips and tricks on how to continue to increase your income. A couple other things that are happening on the horizon, I'm not even on the horizon, that are happening right now, and you're probably all seeing it, is what's happening to second home and non-owner occupied. That is shrinking to only 7% of your portfolio can consist of second homes and non-owner occupied. And guess what? Florida is a huge second home and investment property state. So these are things that are going to impact you, in addition to the refi slowing down and rates going up. And then you throw in what high risk loans are going to be considered going forward. If you have 2 out of the 3, it's greater than a 90% LTV, less than a 680 score, and higher than a 45% DTI. If you have 2 of those 3, your portfolio for refinances cannot consist of more than 3%. And on purchases cannot consist more than 6%. So that, we call it that agency box is getting smaller and smaller. Therefore, that non-QM box is going to get bigger. And if you don't learn how to do it and work with experts like Stacy and Scott, you're really missing the boat. So Scott, what makes Angel Oak different than, say, other non-QM lenders out there?
Well, it's really experience, tenure. I like to use the phrase that we were the first. We're the longest by tenure. We were the first to get back into the non-QM space after the mortgage meltdown of years ago. We've been at it for a long time. Technologically, process-wise, I think we're far ahead as opposed to most of our competitors out there. I like to use the phrase, our competitors are running into problems that we solved, 2-3 years ago. And really what separates us is the people. We're a customer service oriented business. We try to go above and beyond as much as we can to provide customer service to our partners throughout the entire process, starting up front with the account executives. Like Stacy just mentioned, Our goal is really to just be a resource to make your life as a loan officer or broker, when you send a loan to us, we want to make your life as easy as possible. And we want to make the process of that loan start to finish as easy and as streamless as possible. We want to be fast, friendly, and simple. That's the motto. So I think that's really what separates us. It's going to be the experience that we have in the non-QM space, the processes we've put in place, and then the people, especially your account executives. We're here to help you every step of the way. That's the culture we built. That's how all AEs in this company are trained. And it really, I think, shines through when you work with an Angel Oak AE.
Yeah, and if you're on this call and you're not signed up with a non-QM lender, do your due diligence. Are they vertically integrated? Angel Oak is vertically integrated. So when Scott and Stacy are doing your pre-qual up front, that they know that that's a loan we're going to close. We're not getting a CTC and then giving it to an investor to say, hey, is this something you're going to purchase from us? Right. You get a CTC, you're closing that loan. Stacy, talk a bit about how important that means to your originators.
Oh my gosh, it's everything. There's nothing worse than going to closing or thinking you're going to closing and then something pops up and they ask for another item, or they do some sort of report or send it off to another company to do their last minute underwrites. We know that there's some lenders out there that do that. There's nothing worse than having a CTC and, oh, I'm sorry, we had to send it off to our other company to do a final underwrite and they came back and now we need this, this, and this. So it's everything. Once you have a CTC, you're going to the closing table. It's everything with Angel Oak.
Yeah, and yeah, Scott, you're going to say something?
I'm going to say that's huge for everybody on this call. That's huge. And probably the biggest point that sets us apart is the vertically integrated structure. So for everyone on the call, what that means is that at Angel Oak, we originate, we underwrite, we fund, and then we securitize the loan all ourselves in-house. We're not aggregators. We're not selling those loans off to somebody who then has to QC them and then securitize them to the secondary market. Our capital markets division, Angel Oak Capital, does all of the securitization. So it's truly vertically integrated. Everything is done in-house. Therefore, when we issue a clear to close, like Stacy said, that loan is going to fund and close. But there is no second level QC. There is no investor that has to review it. We are the investor. We are the originator.
Stacy, let's talk about, the hot market you're in, right? You're getting people who are saying, you know what, I can't afford to not get this house because the next one's going to be even more expensive, right? So, what we're hearing and seeing a lot of people paying cash. Tell them how we can help them with delayed financing, because we're seeing a lot of that lately, right?
Yeah, so down here in Florida, I'm in the Tampa, Sarasota region, and I'm seeing a ton of it. There's multiple backup offers. If you don't meet the contract date by even within 5 o'clock cutoff, the people are keeping your EMD and selling it to the backup offer. Cash offers 100 grand above asking price. I mean, it's just a war out here right now. And if you don't have that closing on time, a lot of people, because they're afraid of missing that closing date, are paying cash. So the great thing about Angel Oak is we do allow delayed financing. So if somebody needs to pay cash to securitize that home because they're afraid that they're going to miss it, then we can turn around and refinance them a week later, 2 days later. They can turn around and start sending in their application to us right away to recoup that cash that they just had to use to put down. Because if any financial advisor right now is telling you, hey, money's cheap, keep your money in the market and take out a mortgage, use their money because it is so cheap. Keep your money in the market. So do your delayed financing, do your refinance, get that cash back in the hand and put it back in the market. So many people are doing so well with that right now. So that is I'm doing a lot of delayed financing transactions because of that. Just the market, the way it's going, they need to grab it, they need to pay cash. But now, hey, I want that cash back because I want to go, play in the market some more. So it's a big thing down here.
My apologies, Stacy. Sorry about that. Scott, anything else you've seen, and maybe an example of some delayed financing that's been working out for you?
It's a great tool, you guys. Like Stacy said, especially in this market. And now we added that wrinkle where if your borrower purchased a property with even a hard money or a private money loan, we can still do the delayed financing for them. It doesn't necessarily have to be that they use their cash. So there's options there, and it's a great tool in this market where people really have to go out of their way to put in that date or to close on time on a property. A lot of times they just want to get into the house, get it under their belt, close, take title, and then up to 6 months later, we can do that delayed financing transaction to help them pull some of that cash back off the table. So there's a lot of options there, but I've been seeing it happen more and more. A lot on the investment side, quite frankly, a lot of the investment properties, I'm seeing people use hard money loans to just snag up the property and get it closed, and then they come back to us and do the delayed financing cash out. And then once you're doing the delayed financing cash out, all of the features of our programs apply. So they can still do it and take an interest only, for example, on the debt service ratio if they want to.
Yeah. Stacy, we were talking to Gino a little earlier, talk about that, and Linda also mentioned it, talk about that interest only feature that we have on all of our programs.
Yeah, our interest only feature is amazing. It's a 40-year interest only. Think about that, 40-year interest only. First 10 years is an IO, and then it goes to a 30-year fixed. Borrower doesn't have to do anything or anything like that. We go up to 85% loan to value for the interest only, which is huge. And we even offer it on our investment properties and on our investor cash flow, or what you guys might know it as is the DSCR that Scott was referring to. I don't know any other lender that offers interest only on an investment property. So it's huge. You need a 700 mid score for it. But again, we go up to 80% on the investor cash flow, 85% full doc. It's a great program. You can get a lot more bang for your buck.
Yeah, and our two most popular programs are bank statements and that DSCR program. And those are for very savvy, financial astute people who want cash flow, right? So that self-employed borrower, they want to keep that cash flow in their business. For that investor, they want to keep money in their pocket every month so they can save up and buy another investment property. So, think about that. One of the other things, because this is the state of Florida, right? Stacey, we always get that question, we're pretty quick to tell you what we don't do, and condotels and short-term rentals we don't do. But Stacey, you mentioned the other day about what are some of the really slick things that we do with condos and for condos?
We do non-warrantable condos. There's many reasons why a condo is non-warrantable. A lot of the ones that we don't do, like John just mentioned, is the condotels or the short-term rentals. But you have a lot of condos in our area and down in South Florida area where the HOA doesn't have any reserves, or at least they're under 10% reserves. That's something that we can do. We don't hit the LTV or the rate for non-warrantable condos. So that is huge. A lot of people think that you're limited on your loan to value because it's a non-warrantable condo, and you're not. So we don't hit that rate or the LTV. So the HOA having no reserves, 100% investor concentration. We have a lot of investment condos over here. I live on the beach area, tons of investment condos over here. And now you're seeing a lot of people from New York, California, all other states buying these investment properties down here right now so that they can have a staycation somewhere. So I do a lot of non-warrantable condos in my area, and it's great.
So just got a question in here, and that's great. You guys use that chat feature for here. Condos with that are in a flood zone and flood insurance. Scott or Stacy, either one of them want to?
We do require the master policy to have flood insurance if they're in a flood zone. Yes, that is a requirement for us.
Okay. I'm trying to get to the chat. Will you finance the ratio of owners to renters if it's too high? So I think that comes back to the concentration of help me out, Stacy, here. I see you shaking your head.
Yeah, we allow 100% investor concentration. So if the entire complex is investors, that's fine. Now, if one investor or one entity owns more than 20% of the complex, that's something we won't do, because they could technically, determine the value of the property when they own that many. If they were in a fire sale or something and they had to sell their portfolio off real quick, they could bring the value of that complex down. But yeah, 100% of it complex can be investors.
Yeah. So Stacy, that brings me back to something, that, Scott and Stacy do a really good job. And it has to do with our vertical integration. 30% of the loans Angel Oak closes do not meet our guidelines, right? So Stacy said if one entity owns 20% or more, we won't do that property. I got one done a couple of years ago where they did have one entity own 20%, but our borrower was coming in as an owner occupied. So those are things, and that was a really good LTV and great borrower. So those are things that Scott and Stacy and all of our reps throughout the entire state, they'll work to get these deals done for you. And that's why, Scott mentioned that vertical integration. We know and we have the experience of the appetite for the loans that Angel Oak will close, fund, and securitize. So
if I can add, John, a couple other cool tricks on the condo side that we see day to day and we're able to save a lot of deals with is, well, first, we are pretty lenient when it comes to litigation. As long as it's nothing that's going to affect the structural integrity of the property or is a safety issue. For the most part, we're pretty lenient on those. So if you have any condos with litigation, shoot them over to us. We have it looked at up front. Get us the documentation. We'll have it looked at up front before we even issue a pre-qualification or submit the loan so that we have a blessing to move forward with it. And then also touching back on the reserves piece is the biggest issue we see. So cool little features. Basically what's happening is a lot of the projects in South Florida, and Stacy's side and my side as well, are condos that have been here for a long time. And so what happens is that they may not be currently collecting the 10% requirement in the current year's budget because they've already established a separate reserve account over the years. So why should they hit their homeowners for a larger reserve in the current year budget when they don't need it? If they have a separate reserve account that's already funded, we will actually use the balance in that separate reserve account along with whatever is being collected in the current year's budget to meet the 10%. You don't see that on the conventional side. So maybe they're only collecting 5% in the budget for this year for 2021, but they've got a ton of money sitting in this separate reserve account. We combine the two, we meet our 10%, and we can move forward up to a 90% LTV. We save a lot of loans with that little cool tip right there.
yeah, I mean, guys, Scott and Stacy can really, really help you close more loans. Obviously, you can see by their expertise. Question came in here through the chat. Yeah, our minimum loan amount on through most of our program is $75,000, $150,000 for bank statement loans. So, Stacy, let's talk a little bit about products. What's your favorite program and why? It's like saying a favorite child. I know.
Yeah. Hope my kids aren't listening. So I would have to say I'm torn between the bank statement program and the DSCR program. I do a lot of both. So many good aspects on both of those. Probably the DSCR program, the reasons I like that one so much is, again, there's no income, there's no employment, there's no DTI. You could be a stay-at-home housewife and get this loan. You could be retired. I don't know what the person does for a living because it's not on the application. It's based solely off the cash flow of the property. But the other good thing is if you're putting at least 25% down and you have a 700 mid score, both of those are very easy to obtain when you're purchasing an investment property. So 700 mid score, 75 LTV or less, the property doesn't have to cash flow at all. But you don't even have to have a cash flow. We don't have to worry about what the appraiser put as the market rent on there because it doesn't matter. So you could submit it at 80%, you get that appraisal back and the appraiser didn't do his job real well and you don't cash flow. All we can do is put 5% more down and you don't have to cash flow. So that is a huge, I don't know any other lender, honestly, that offers that, especially at that high of LTV. And the other great thing about the investor cash flow DSCR program in any of our investment properties, you can close in an LLC. So if you close in an LLC, anyone on the LLC has to be on the loan, max of 2 people, but that LLC has no seasoning. You can open that LLC tomorrow and close in it. I mean, today and close on the loan tomorrow. So there's no seasoning on that LLC if they want to protect their assets by putting them in an LLC. Again, it's only good on investment properties. So that's my favorite part about the DSCR program. So
Talk a little bit about the prepayment penalty on there, because there is a prepayment penalty, and what you've seen, Stacy. Give another example too, kind of outside of Angel Oak's guidelines, how you were able to help a borrower with 10 investment properties.
Yeah, I did 10 for one borrower. He was actually, these were all cash out refis, and he was basically cashing out to buy more investment properties because the market was so hot. But he was also getting out of private mortgages. So not only did I help him get out of a 12% private mortgage on 10 of his properties, but I was also giving him the cash opportunity to go purchase more properties, which again, he would turn around and give to me at a lower rate than doing a private lending. So it was a win-win all the way around, a great month for the borrower and for me.
Scotty, talk about the prepayment penalty, and there's a lot of people who may be a little leery because of the prepayment penalty and refinancing ahead of time out of it. But obviously, you're seeing, such a great appreciation that you're kind of seeing almost you're seeing a refi boom within non-QM.
Within the non-QM space, absolutely. So the prepayment penalty, I don't really see it as a big issue because there's so many options available to buy it down or get rid of it. You can bring it down from 3 years to 2 years to 1 year, or you can buy it out completely. And then there's options to even do that. You can buy it out or reduce it by taking a bump to the rate, or you could buy it out or reduce it by paying a discount point up front. It's really totally up to the borrower. If they have a hunch that they may only be in the property short term, they can bring it down to a 1 year prepay. And they're not as concerned with it, and they have a few different options to do that, and they're really not very costly. So I don't find the prepay ever to be an issue with our investor community. Investors seem to be okay with it. I mean, look, the alternative for a lot of these guys that are using that program has always had to be hard money, where they were getting hit with some sort of prepay balloon. They were paying 3-4 points up front. They might be paying 9% interest or higher. So I've found that when they come to us for the DSCR program, it's really a non-event.
And that prepay penalty, I'm sorry, John.
Yeah.
That prepay penalty is only on investment properties. There is no prepay penalty on owner occupieds or second homes. So just remember that as well. So if you're doing a bank statement program or full doc on a second home or owner occ, there is no prepay.
So Richard, hopefully that answers your question there. We're going to get to, and then Zachary has a question. I'll throw this one over to Scott. How many properties can a borrower have?
Well, there's no limit. So there's no limit to how many properties a borrower has. Most of the investors using the investor cash flow program have, 5, 10, 15, 20 properties. I think I had one that had 30 properties. The beauty of that program, or really any of our investment programs, is we're only concerned with the subject property. We're only underwriting the subject property in terms of the debt service ratio, in terms of reserves. We only require 6-month reserves on the subject property. If it's a cash out refi, the cash out can cover the reserves. So it really doesn't matter. There's no limit for us. Doesn't matter how many properties the borrower owns.
Yeah, so Zachary, hopefully that answered your question there. I know, Gino, you said you had a couple of questions you wanted to throw out to our experts here.
Sure. So you talked about cash out transactions, and on cash out transactions, are you able to use that cash out money to meet the reserve requirements?
Stace, you want to take that?
Sure, yes, you can. And like Scott said, our reserves are only on the subject property, not on any other properties that they own. And cash out can definitely be used to cover that reserve requirement.
On all programs.
Yep.
Excellent. And using these non-QM programs for a primary residence, many of the programs offer a 10% down payment using a 90 LTV. Is there any mortgage insurance requirements for those?
Scotty, I'll let you.
No PMI. No PMI on any of our products and programs over 80% LTV.
Yeah, so I think that's critical, Gino, because everyone's in such a rate sensitive environment, and when you're talking about that over 80% LTVs, when you throw in PMI, and then you compare that to what the rate that we're charging at a 90% LTV, you got to look at the payment and really be that consultant to that borrower, and not just the rate pusher. So, Scott, let's talk a little bit about. It may not be your favorite subject, but it's definitely that's our most popular product. Talk about bank statements, and what do you like most about that?
It actually is my favorite. I was Stacy. I was thinking that she was saying the same thing here. I love both programs, but I'm kind of a little entrepreneur at heart. So I love what the bank statement program does in the community that it serves, and the flexibility and the versatility that the program has. So, bottom line, it's for self-employed people, individuals that own a business, or maybe they're 1099, or maybe they're filing Schedule C. There's so many different ways to cut it, but there really is just limited financing options available in the conventional world for these borrowers. It's all going to come down to what they're reporting on their tax returns. And as we all know, anybody that's one of those three, self-employed, 1099, Schedule C, they're taking advantage of the God knows how many page tax code that the United States has. So, their income is going to be limited on what they're showing. By using their business bank statements or their personal bank statements, we are literally doubling, tripling, quadrupling their buying power based on the true cash flow that they're seeing, not what they're reporting, but the true cash flow that they're seeing. The program, when we look at the statistics, it varies month to month, but I think our average loan amount is probably what, John? Recently, it's over 500,000 easily.
Yes, that's over 500. Yep.
Average credit score well over 700. Average LTV can fluctuate anywhere from 70, 80%. These are good borrowers. They have assets. They have money to put down. They have reserves. Most of the time, have phenomenal credit. They just don't show the income on the tax returns, and we're providing an option for them that they already know is usually their only option. So I love serving that community. We talked about earlier doing the realtor presentations. I'm sure Stacy has the same. I probably do at least one or two, sometimes more realtors a month on the program. And for them, we can do the personal bank statement program, or we can do the 1099 only option. So there's different options there. But the versatility that the program provides and the community that it serves is really what I love about the program the most. You could have, for example, a borrower that owns a business doing the bank statement program using the business bank statements, and then their co-borrower, spouse, is a W-2 borrower. We can combine income from the two. We can use the bank statement income for the one borrower that's self-employed, the W-2 income for the W-2 wage earner, combine the two to qualify the loan. And what's even better in that case is we actually use the credit score of the highest wage earner. So there's so much flexibility and versatility. It's something you really have to have in your tool belt as a loan officer, as a broker. It's something that will add, for you guys understanding the bank statement program, will add so much value to realtors and referral sources. When, like we said earlier, when you can say, hey, look, your buyer on the tax returns, their buying power is only showing they can afford a $250,000 mortgage, but I reviewed the bank statements for you, and with those bank statements, we can now take them up to a $500,000 mortgage or a $600,000 mortgage. You just doubled the income for that realtor on the sales price of that home. I think that's huge. It adds a lot of value. And then the best part about it, what we found, and I think a lot of the loan officers and brokers that have done these loans can attest, is usually if you're closing a loan for a self-employed borrower, they usually know a lot of other self-employed borrowers, their friends and their buddies, and they become a pretty good referral source.
Yeah, and another great referral source is a CPA. And if most of you just got done doing your taxes last month, the lights should go on. Why can't you market yourself to a CPA? Find a self-employed borrower that CPA had as a client, pre-qualify them with Stacy or Scott, and then bring that pre-qualified buyer to a realtor. How powerful is that, right? My God, that's pretty powerful. And I heard a couple statistics the other day. One, there are more self-employed borrowers than there are VA borrowers. That's one. And then two, 20%. The increase in business applications in 2020 increased 20% over 2019. People are creating businesses during this pandemic. So start to market yourself to them. We have to wait 24 months, but think about that.
And side note, those bank statement programs go up to 3 million loan amount. It'll go up to 2 million loan amount up to a 90% LTV. Think about that, $2 million loan amount, 90% LTV, and then it'll go 3 million loan amount up to an 80% LTV. So there's a lot of room there.
So Stacy, talk about doing a pre-qual for TBD properties. That's a question I've seen.
Yeah, absolutely. We will do a pre-qual. So in our portal, right on our website, we have a box that says non-QM quick quote. It's a phenomenal pricing tool. I don't know if we'll have time to run through that for you or not, but it's a box right on our website that says non-QM quick quote. You enter the information going down, you select the rate, and then you can send the AE your 1003 and credit, and we'll do the pre-qual for you. We'll write it up, we'll send it back, we'll give you all your different borrower paid or lender paid comp options that you can choose from. We write our own notes of things that we might have seen that need to be thought through or required from the borrower. And definitely we'll give you a pre-qual. You'll see a lot of times builders too will require an actual full-on approval from a lender, not just a pre-qual from us, but the full approval. Obviously, that's not a TBD property anymore. You actually have a contract, but our office will give you that underwriting approval from an underwriter, even though the house might not be finished for another 6 months. Of course, you'll have to update all your documents and everything before it closes, but we'll extend that rate for free for you. We will continue to keep that loan on file until that house is complete, and then within 30 or 45 days of completion, go ahead and re-stip you out. So I think that's an added benefit too, because a lot of builders require that.
Yeah, great point, Steve. I had a question here. I think the name is Jamia. She has a borrower that pays cash, to their landlord, and unfortunately, this business is all about documentation, and unfortunately, we would have to see either a rent check or that automatic payment coming out of their checking account. But tell them to start doing it now, though. And again, we get exceptions, and if we maybe have 12 months and the payment shock isn't that high, maybe that's a deal Stacy or Scott or your other AE can get done for you. So but this is, again, when you're talking to borrowers that might want to do this, knowing this and talking with Scott and Stacy on their expertise, they can maybe build your future pipeline 12, 24 months down the road. So, and the other thing, we talk about a lot, but we haven't touched on is, Scott, let me let you take us through some of our full doc programs and some of the cool features on them, and then I can kind of get into the point I was just going to make here.
Yeah, so we have 2 tiers on our full doc programs. We have what we call our Portfolio Select program and what we call our Platinum program. Your Platinum program is going to be a little bit stricter in terms of guidelines. It's not quite as strict as conventional. So your seasoning for foreclosure, short sale, BK, deed and lose is 48 months, as opposed to the higher years you're going to see on the conventional side. So a lot of the loans that can't get done conventional for a lot of different reasons, we will usually be able to get done under that Platinum program. And then we take the next tier down would be the Portfolio Select program. The Portfolio Select program only has a 24-month seasoning requirement. It has a little bit looser credit score requirements, goes down to a 620. So if there's any reasons there that the loan's not able to get done on the Platinum side, we have that option on the Portfolio Select side. One really cool feature that we have going back to self-employed borrowers, let's say you do have a self-employed borrower that qualifies full doc, no problem, but maybe you want to use the 1-year tax return feature. So on the conventional side, the borrower has to be self-employed for 5 years to use the 1-year tax return feature on LP. With our Platinum program, they only need to be self-employed 2 years to take advantage of the 1-year tax return feature. So we've been able to save a lot of deals there on the full doc side as well.
Great. There was a question here about 1099. Stace, you want to just elaborate on 1099? And does it have to be, try to answer Richard's question, does it have to be with the same company?
So we do have a 1099 program. 1099 borrowers are obviously considered self-employed. So they have the option of doing a bank statement program for the 12 or 24 months. If you're doing the bank statement program on a 1099 borrowers, they do not have to be with the same company for the last 2 years. They do have to be 1099 for the last 2 years, but no, they can switch companies if they're a realtor with Keller Williams and then they move over the Coldwell Bankers. or what have you, that's fine. Now, if they've been 1099 with the same company for the last 2 years, we have a 1099 program where we will average either 1 year 1099 plus their year to date, or 2 year 1099 plus their year to date. And again, kind of like the bank statement program, we will apply an expense factor on there because we knew they do have some expenses when you're self-employed. But that, if you do have a borrower that does change jobs or has had multiple employees but still remains 1099, then your AE is going to instruct you to go the bank statement route. And again, like Scott said, when you do this, whether you're doing a 1099 program or a bank statement program, owner occupieds, we go up to 90%, and you can have a spouse with W-2 income that we can use as well. Or even if our self-employed borrower gets W-2 income or fixed income or child support or alimony, we can use that income as well.
Right, right. So, one thing was, Scott, thank you, Stacy, and Richard, hopefully that answered your question. One of the things Scott was talking about with regards to full doc loans, we have, a pretty low seasoning requirement for bankruptcies and foreclosures. And a lot of this, you really need to think about a 2-for-1 deal. Get that person in that house who may have had a bankruptcy or a foreclosure within 12 to 24 months. And then once they get further seasoning, maybe you're refinancing them into a conventional loan. So think of it as a 2-for-1, as long as you're staying in touch with your borrower. And as Scott mentioned earlier, he's got a little bit of a non-QM refi boom going on right now. So people that may have purchased on a bank statement at 90% 2 years ago, now their LTV is probably 75. Their credit scores are better, and they're going to get a better rate. So think about that too. So as your conventional refi starts to slow down, think about your non-QM refi. So I know we're getting close to the end of time. One other question I had here, maybe we can spend a minute showing our quick quote tool. Stacy, talk a little about a 1031 exchange.
Yeah, we do see a lot of people that have that 1031 exchange where they have to put that money down right away on a new investment property. So we do allow that. We just need a copy of the 1031 exchange agreement, and we'll do them.
Right, and I'm going to go, let me know if you guys can see my screen.
I can
Yes.
see it.
See it fine.
And Mario, we'll get you my contact information on how to get signed up with Angelo. So thank you for asking that question. We'd love to have you as a partner. So Scott or Stacy, who wants to take me through the non-QM quick quote?
I'll go ahead and take it through. So as you guys can see here, this is our non-QM pricing engine. It's very simple and easy to use. You literally just fill in the top 3 fields to start to get some information. So John has a 750,000 loan amount, 760 to 779 credit score, inputted to 70% LTV, change the income type to 24 months personal bank statements. And you can see at the bottom, it's telling you the LTV you requested 70%. By the way, the max LTV on this program is 90% should you want to go higher. And then your par rate, which would be your borrower paid pricing on this scenario, is of 3.75%. Gives you a couple of notes on the guidelines there. Bankruptcy seasoning is 24 months. Housing seasoning is 24 months. Reserves are 6 months. And it tells you the lock duration is 45 days, which on the non-QM programs, like Stacy mentioned, we extend those at no cost, basically for as long as it takes to get to closing. And the way this works is, should you see this pricing and say, hey, I want to get this over to my account executive and have them look at it, you would click on the blue select button, which will take you through the steps of the next couple of pages 2 and 3. You'll be able to upload, import, drag and drop your 3.4 file there if you have it ready to go. If you do not have it ready to go, you could click on the next button and you would fill out some information and upload basically your personal information, your account executive, company name, loan officer information, and then you'll have the opportunity down at the bottom to upload your 1003, your credit report, your 1008, your bank statements if it's a bank statement loan, and any other documentation that might apply. It's a literal drag and drop system. It has a huge capacity for memory, so you can drop tons of bank statements in there if you need to, and submit it. And that easily, the pre-qualification is going to be sent directly to your account executive, who will then begin to work on it and usually turn it around for you within 24 to 48 hours.
So I'm just going to log in here because I know we're getting near the top of the hour here, Gino, and I want to be respectful of everyone's time. I'm just going to show you. Now, you do need login credentials to get here. Stace, you want to just kind of show me through the marketing portal?
Yeah, so once you get your login credentials, you have access to marketing material. Across the top, you'll see where it says marketing portal. And then you get your little drop down. You can show presentations, social media, and the very bottom is flyers. So once you click on flyers, you can actually pick whatever flyers. There's multiple flyers. There's why rent when you can own, bank statement program, highlight program, DSCR program. There's all these different flyers that you can choose from for whatever your audience is. And when you click over to where you fill in, just click on one of the flyers. So you're going to fill in that information off to the left with your information. So Angel Oak is nowhere on here. You can put your logo in there. You'll see your logo information at the top on the left-hand side of the screen. You can do your own disclosures. So you'll fill in that information, and then every time you log in, if you click on a flyer, that's all pre-populated and will pre-populate to every flyer that you choose from here on out. You only have to do it once.
Another part.
I'm sorry. This is free marketing material for you guys. So it's your information. It's, again, Angel Oak's nowhere on here. You can drop them by open houses. You can drop them by realtor offices or whoever you're targeting as your clients. So this is just free for you guys. All you got to do is print them.
Yeah, and these are social media posts that, if you want to direct your social media to a realtor, you can do that. Or if you want to direct it to a borrower, it's already done for you. We make it really easy. As Scott says, the website's pretty easy, intuitive. We make the marketing part really easy for you. And the one part we talked earlier about how you can leverage your account executive, Stacy and Scott. This is the realtor presentation. We already have it done. And there's a flyer on how you can recruit people to come to that realtor presentation. This is all done for you. I know we're at the top of the hour, Gino, so I want to hand it back over to you. But before I do that, I really, really want to thank the FAMP. And again, it's really important to be a member on how they support you at the local, state, and federal level. And more importantly, Stacy, Scott, I love working with you guys. It's an honor to work with you guys. You are truly the best in the business.
Love you.
Thank you very much, guys, for doing this presentation for us today. And I know you offer more than loans just the self-employed borrower, but I think I speak for the industry saying that self-employed borrowers are probably the most time-consuming borrower to work with. So programs like the bank statement program, programs like the rental income program, they are such a huge help because it literally is 1003 bank statements submitted for verification with the credit report. And it takes the guesswork out. It's also a really solid pre-qual when you're giving that to a realtor. So everyone, I want you to look out. We will have a lender panel coming up soon. Angel Oak will definitely be a part of that. We're going to have some workshops at the trade show. And like I said earlier, for those of you who are FAMP members, you can access this information on our portal in the library and our website. And if there's any questions, reach out to these guys directly. Like I said earlier in the presentation, very, very friendly, and they will definitely answer all your questions. Thank you again for doing this presentation for us. We're going to have more of these, and we'd love feedback from our members, and let us know if there's any subjects or topics you'd like to bring up and have them come out and talk about specifically. Thank you, everyone, for attending. Have a wonderful afternoon.
Thank you.
Thank you. Appreciate it.